Let's have an overview of management accounting, which is the CEO module. We need to look at the difference between financial accounting, which is the SAP FI module, and management accounting, which is the CEO module, to fully understand what the CEO module is being used for in SAP. One of the main things with financial accounting versus management accounting is in financial accounting, the reports are done for external users. This is external auditors, the share market holders, any other investors, anyone outside your organization who may be interested. The reports are made for them. This is where your balance sheet, your income statement, your cash flow statement, or segment reporting, any type of external requirements is done through financial accounting. Now in management accounting, the reports are purely done for internal users, that is your staff. For example, it can be your sales division to analyze the profitability of their products. You can see the performance of your divisions, how much expenses they are incurring by creating them as cost centers. So you can also see different type of other reports like your profit center reports, how well your products are doing or how well your product lines are doing in different profit centers and so on. So these are all related to internal reporting. You do not have to publicize this to external people. Also, you should not publicize because this all contains very much sensitive information with regard to your company, divisional expenses, as well as more importantly the product profitability, which you should not disclose to outside your organization. So these type of reports are all within management accounting, and you can manipulate whatever amounts within this report also, how you want to allocate or how you want to allocate between divisions or products and so on. That's all up to you. So nothing is monitored of what you do around with the information in management accounting. As I mentioned earlier, in financial accounting, the two main financial statements you produce is your balance sheet and income statement. Whereas in management accounting, you will be producing cost center reports, profit center reports, profitability reports, product profitability reports. There are many different types of management reports based on your financial team's requirements. In financial accounting, you actually create all these financial statements or reports at the company code level. This is for your particular company. That's why you call this company code. For each company code only, you see all the financial reports. You do not see at a lower level. Of course, you might see that business area level or segment level, but they are a bit more at a high level or some different segment requirement. If there's a country requirement that you need to report by segments, then of course you can see the segment level. But majority, 99% of the time, all the financial reports are created for your company code. Whereas in management accounting, you look at a smaller level. For example, for each cost centers, how much have I budgeted, the maximum amount I can have for one particular project or one particular short-term project or a marketing campaign and so on. You can create a budget. You can also put planned values for your cost center. For example, this year for the engineering division, you should only spend $100,000. Then you can see the actual amounts and you can see your variance. All this type of budgeting, planning and all you do for your cost centers. And also for your commitment also. For example, for one particular project, you might have committed already 50,000 worth of purchases from a vendor. You have not done any financial transactions yet, but you have raised a purchase order, so that becomes a commitment. These all can be monitored via the management accounting reports. And of course, financial accounting in SAP you call it as SAP FI module, and management accounting you call it as CEO module. That is because you usually call it as FICO consultant or FICO trainee together, but in terms of actual content in SAP, these two are two different modules. Just like SAP SD module and SAP MM module or SAP HR module, SAP PS module, SAP PM modules, these are all two different modules. That's why you have separate SAP certifications. You have a separate certification for the FI module and you have a separate certification for the SAP CEO module. Let's look at the components of the CEO module. So you have cost elements. These are similar to GL accounts. Most of the revenue and expenses GL accounts are mapped as cost elements. They are called primary cost elements, and there's another item called a secondary cost element, which is used for allocations. We will discuss in more detail when we come across the later presentations of the CEO module. You have cost centers. These are typically your departments or divisions, admin department or finance department, HR department. These are all created as individual cost centers. You also have cost centers for your production lines also. For example, engineering or maintenance, those kind of production line related expenses also can be grouped at a higher level at a department or a mini division level or a mini activity level called cost centers. Then you have profit centers. Profit centers are mainly created at a much higher level than cost centers. Profit centers have both revenue and expenses. These are typically created for your high level product grouping. For example, if you are in the business of manufacturing healthcare products, you can have a profit center for soaps or detergents. Those kind of at a high level you can have the profit centers. And under those detergents you can have different type of brands. So like that you can have profit centers. It can also be applied for other different environment also. For example, in an automotive company you can have profit centers for cars. You can have profit center for motorbikes, one for SUVs and so on. Profit center you can also run via the SAP financial accounting module as well. So it's quite common for both FI and CO module. You have internal orders. Internal orders are typically created for short-term projects or things like marketing campaigns. For example, if you want to have a marketing campaign for one particular product, you can create them as an internal order and monitor their expenses. Similarly, you can also create internal orders for your fleet vehicles. Maybe you have about 20 vehicles. You create all your vehicles as assets anyway, fixed assets anyway, but day-to-day expenses like petrol, insurance, fuel, drivers expenses and so on, all these kind of miscellaneous expenses related to vehicles, you can create each vehicle as an internal order, and when you actually do the expense posting, you point out to that particular vehicle's internal order. In this way, you can monitor the expense of all your vehicles. So internal orders can be used for also like vehicles. Then marketing campaigns. Like I mentioned earlier, for one particular product, you want to do a marketing campaign, you create an internal order for that particular product as a marketing campaign. And all the expenses you do with that marketing campaign, you can post to that relevant internal order. This is all used for analyzing expenses and monitoring how much you have actually spent. You can also assign a budget value. That means you cannot exceed beyond this amount. You can see the actual amount, you can see the commitment amounts, and you can also see the variance amounts. Again, internal order is all used for small time projects or small object reporting. Profitability analysis is a very powerful tool in SAP CO module. This way you can actually see the profitability of your products, but that is revenue minus expenses, and you can see the profit. And this you can actually see at a higher level or at a lower level. For example, you can see it at a higher regional level, or you can see it at a interstate level, state levels, or even at the county levels. Whatever way you want to design via location or customer groups. It can be for different type of customer groups. How well each customer group, how am I selling my products, what's the pricing I'm keeping, what's the expenses I'm incurring for those products. And you can see the profitability of these customer groups. Similarly, for distribution channels, whether I'm selling it via supermarket chains or pharmaceutical chains or multi-departmental stores and so on, you can see the profitability of your products. Finally, you come to product costing. Product costing is also another important module in SAP CO. Is actually done mostly implemented at the manufacturing environment, where you can see the cost of your product more clearly, rather than in a service environment where you may not be able to actually physically see the product. In a manufacturing environment, when you actually manufacture the product, you can see the cost of the product. It can be two types, either fixing some products or mixing some products. I just call it as fixing and mixing because that's much easier to remember. For example, if you are in a car assembly line or a company which actually produces vehicles, then in the car assembly line you actually bring in a lot of different parts and you fix the car. So these are all actually fixing with different parts, and for each part you will have some expense because you would have probably procured that from an external vendor. So you can calculate all those items individually and put it to one production order and see how much that car is actually costing you. And you can also allocate all the other overhead expenses also to that production order. For example, like all your salary and other admin related costs, utility costs, electricity expense and so on. The second thing is, when I said mixing, it means, for example, if you're a company like Dulux, they actually manufacture paint. So paint is a process of mixing different chemicals and items. So that is a mixing environment where you can see, for example, to make 1000 liters of paint, you will need this much of item A, this much of item B, this much of item C. You can see the total expense of all those items, and then you can actually divide by the per unit cost, depending on how many units you can produce out of those items. So that kind of a calculation is all based on process orders, because it's a process of how you mix this and that. It also applies for things like detergents or any type of items where you don't actually bring in items and fix together, when actually go and mix items together, then the process order is used. Anyway, we'll discuss this more in detail in product costing module, and just basically at this point of time, you just need to understand that product costing means is to find the cost of a product. Very simple, you can easily identify both those two words. So for all the components of the CO module, the initial value flows from the FI module. So when you do a vendor invoice, a customer invoice, or any type of transaction you do in the FI module, from that only the values go into the CO module. For example, if you are posting an expense, a salary expense for all your employees, you post it to a relevant salary expense account, and you choose the GL account, you choose the amount, you choose what company code, and so on. At the same time, you need to mention to what cost center they are belonging to. For example, each employee will belong to one cost center. This employee belongs to the finance cost center. This employee belongs to the IT cost center. So at the time of posting the salary expenses, you also need to mention the cost center. So that's how one way the values are flowing to the cost centers. Again, all your end products or end materials, they all link to a profit center. And these, when you actually sell this via the sales orders, automatically the values flow into your profit centers. And similarly, any other type of expense also, you can also post it to internal orders and so on. So at the time of financial entry, because you specified the CO component as well, that is the CO objects over here, the values are flowing directly from financial accounting to management accounting. And then once the values are over here, you can actually allocate from here within cost centers or within internal orders. You can settle to cost centers. You can settle some information from this to the profitability analysis and so on. This all can be done later via allocation cycles. You call it as assessment cycles or distribution cycles. It's a bit more technical at this point of time, but you will see later on how you actually allocate costs from one cost object to another in the CO module. Let's look at how expenses or costs or any other type of revenue or any other type of information flows to the CO module via other modules and applications. From the FI module, usually you will get all the revenues and expenses flowing to the CO module. For example, via assets, in the asset master record, if you mention the cost center, which most likely will be a mandatory field, in the time dependent data tab, whenever you have the depreciation expense for that particular asset, it flows onto that cost center mentioned in the asset master data. Many divisions or departments in your organization will have their own assets, from furnitures, fixtures and fittings, IT related items like laptops, computers, and even some division will have their own vehicles for fleet management and so on. All these type of assets, whenever they have their depreciation expense coming in, it will post to that particular department's cost center. So that's one way from how from FI module the costs are flowing. Also, if you use a direct FI vendor invoice transaction using the transaction code FB60, at the time of posting the expense, you can also specify to what cost center or internal order or any other type of cost object you want to post that expense to. So all these type of FI related transactions, you have to mention the CO object as well. You can control this via the field status group of that particular GL account, and then the cost or the revenue or any other type of values will flow to the CO module. Now you have the HR module in SAP. In some organizations, they might be having a different human resource information system where they'll be actually posting the salary related expenses to the SAP system. So when they actually post, they'll have to mention at least 3 important fields. First, of course, obviously is the company code. Then you have the GL account. To which GL account it should point to. There's going to be a salary expense or pension fund expense or overtime expense and so on. The way you have structured your GL account, it should point to that GL account. Then the next important financial accounting field is the amount. Obviously, you have to mention what's the amount also and the currency, which currency you're going to pay. And then in the CO module related, you usually mention to which cost center this is getting posted to, because usually you'll have all your departments and divisions, they'll have their staff, and all of their staff will be assigned to that respective cost center. So when you have your salary related expenses posting in the FI module, you can specify to which department or which cost center this expense should get posted to. So via that mapping from the HR module to the SAP FI and CO modules, the costs will flow through via finance module and automatically to the CO module, because you're specifying the cost center. You can also directly specify to your normal admin or overhead cost centers or to your directly related production cost center. For example, if you have a team of engineers producing some item, you can directly send their salary expenses to that particular engineering cost center. Let's look at the logistics modules, the MM and SD modules. In the MM module, the main relation between the MM module and the CO module is during the purchasing process. So when you actually purchase one item, you will be raising a purchase order. Sometimes you might have called a purchase requisition, but usually you always raise the purchase order. So at the time of purchase order, you mention to what cost center or to what internal order or to what WBS element. These are all some of the CO objects we'll discuss in detail later. You mention to what cost object you actually buying this item to. And of course, you mention who's the vendor, what material, the amount, and so on. And these all get captured in the system. Now there is no financial entry over here, but at the time of purchase order, you're committing to the vendor that you're actually going to purchase this item from the vendor and you're going to make this amount as a payment. So that commitment you can capture in the CO module. This is called a commitment. This commitment can be captured against this cost center or internal order or a WBS object. So this commitment is captured in the CO module at the time of purchase order. So that is the first entry, first relationship between the MM module and CO module. Then when you actually have the goods coming in, so then the financial entry takes place. So you have the financial entries, which is the inventory account debit and the goods and receipt or invoice receipt, the GRIR temporary account as credit. So when you post this debit expense, the expense against the inventory account, the inventory account debit entries, that time the transactions can flow to the CO module. Now how it can go through is via the profit centers. For example, for that particular material, when you have created the material, you have specified what's the profit center it belongs to. Because it's a inventory account, it's a balance sheet account. Usually in the cost center accounting, you only have the expense accounts only flowing. That's your P&L statement accounts only coming to your cost centers. But because the inventory account is a balance sheet account, the amount will flow to the profit center via the materials. Now, if it's an inventory, it's in the balance sheet, but sometimes via a vendor, you might be purchasing expenses also. For example, you might raise a purchase order to buy a whole lot of stationery expenses. So those kind of expenses will be coming directly to the cost center. It will not, you don't have to go to the profit center, and obviously all the cost centers will be mapping to profit centers also. We'll look at that in more detail when we actually create cost center master data. So at the end of the day, all the entries will flow to the profit center. Some expenses can come to cost centers, some expenses can come to internal orders, some can go to WBS as well. But end of the day, everything will flow to the profit center. So that's how, again, between MM module and the CO module, you will have within this the purchasing process, we have purchase order, goods receipt, invoice receipt. Through that process, you will have values flowing to the CO module as well. Now in the SD module, which is a sales and distribution module of SAP, is another logistics module. So how the interaction between the SD module and the CO module happens is during the sales process. So at the sales process, initially you'll be creating something called a sales order, which you'll be sending to your customers. And then you'll be having the process of goods issue, where you're actually going to send out the items to the customer. Then the billing, we are going to send the invoices. Sometimes both of these will happen at the same time, but sometimes you might send different batches of goods issue and then send a final bill as well. This can also, first time you can also send the bill first, that's the invoice first to your customers, and then later send the goods also to the customer later. So this is the sales order process: sales order, goods issue, and billing. So similarly, just like how we saw commitment at the time of purchase order, in sales orders also you can have a commitment. Let's say the customer is going to pay you in advance, but that commitment we will not be able to capture directly at the time of sales order. But at the sales order, we will know against which profit center, against which line item, through which customer we are going to get the revenue from, for which product. Then at the time of goods issue only, the real financial entry takes place, because you're going to your goods, actually part of your inventory, is going to go out, and you're expecting revenue from the customer later when the time of billing. So because you're going to send some goods out, it will be like your inventory credit and your cost of sales or cost of goods sold debit, because you're going to have some costs incurred for those products. So at this point of time, there will be a financial entry taking place, and those entries will also automatically flow into the CO module via profit center accounting, and the cost of goods sold will also automatically flow via your cost centers as well. So this is the time where actually it's going to hit the CO module and FI module. At the time of billing also, because you're going to send the invoice to the customer has to make the payment, those revenue amount will also get realized at the time of billing. So here you will have the entry, the revenue entry will be credit entry, and at this point of time the values will automatically flow to your profit center. Now, all this is happening via your customers and your materials. That is the main link between the logistics modules and the CO module. Now we have materials in the MM module. For each material you'll be specifying what is the profit center, so that how flows to the CO module. Then for your customer groups also, you link these customer profiles, like customer account group, what type of group they are. Are they industrial customers, wholesale customers, retail customers, pharmaceutical customers, departmental store customers? You can define many different type of customer groups, and which location they are in, which country they are in, which state they are in, and so on, and what type of distribution channel we are using to give to them. All this information is captured in the customer master data, and all those information will flow to the profitability analysis module, because in the profitability analysis module only we need to analyze what product to which customer, to which region we need to be sold, and how much profit are we making. So those kind of information are all flowing from the customer master data, which we have entered initially related to the customer information. And at the time of selling these items, we mentioned to what customer, what material we are going to sell, and those information are feeding to the CO module. We have the profit centers, the profitability analysis, and the cost centers. You can also have production orders also coming in here as well. Sometimes you directly create one item, you incur all the costs into one particular product cost controlling object. It can be a production order or a process order, and then you directly sell that order also. So that option also is there, so you can directly see how much cost we have created for this particular item and how much revenue we are going to make. Then you have the PS module, which usually consists of projects. That's why it's called project systems module. And in the projects you have WBSs. So WBS is called a work breakdown structure. In one project you can have different levels. For example, if you are building a house, you will have something called a feasibility study, conveyance fees, architectural fees, then laying the foundation, laying the walls, putting the final fittings, doing the touch-ups, and so on. There's so many different stages, and all this can be broken down into work breakdown structure. And for each work breakdown structure, you can settle to an asset. It can be like asset under construction, or it can be a final asset, or you can also sometimes settle the WBS elements of the work breakdown structure to the cost centers or other cost objects. Some items might be direct expenses. So, for example, some of the work breakdown structure might consist of the labor staff expenses that can be directly settled to some cost centers as well, or some other production orders. So mostly it will deal at the time of settlement. There will be integration between the PS module and the CO module. Now let's look at how costs flow within the CO module. In our earlier slide, we looked at how costs flow to the CO module. Now let's see how it actually flows within the CO module. You can easily break down this into 3 different categories: overhead cost controlling, that is COOM, product cost controlling, which is COPC, and profitability analysis, which is COPA. Overhead cost controlling, just like the word it says, overhead, takes the overhead costs that cannot be assigned directly to the goods and services of a company and allocate them later. So here we can see the overhead costs that cannot be directly assigned to the goods or services. Now you know overhead costs, something like admin expenses, HR expenses, your finance department, your IT department, all these can be classified as overhead costs, because you cannot directly allocate their cost to the product A or product B. People who work directly with that product, the engineering department, or sometimes the factory workers or factory expenses, you can directly allocate those costs to those products. But who are working in the overhead departments like this admin, finance, IT, HR, all their departmental expenses, you do not know how much of them to allocate to this particular product A or product B. It can be for the entire company. So then you need to find ways of allocating them via allocation cycles or percentages. This will be done later. So at the time of initially to capture the costs, you allocate their cost to cost centers or internal orders and so on. So most of the overhead expenses are directly assigned to cost centers or internal orders. Later you will be allocating these overhead costs to the actual products. Product cost controlling, just like the word itself, product cost, we saw this earlier, is to find the cost of your product. So it takes costs for producing goods or services and settles them to FI or COPA. Now COPA will be looking at the next stage. So most of the time when you look at product costing, is implemented in a manufacturing environment, because then only you can see for each type of item, you can actually physically see how much cost you're incurring. In a service environment, it's difficult to see how much cost you're directly incurring for that particular service. So in a service industry, you'll most likely not be using product cost controlling. If you are in the industry of providing labor, or in a telecommunication industry, or those kind of industries where you'll not be actually physically selling products, then you will not be physically manufacturing products, you will not be implementing product cost controlling. So in most of the CO implementations, you can see if it's a manufacturing environment, you'll be having product cost controlling implemented. If it's a non-manufacturing environment, then the COPC module will not be implemented. So initially we collect all the costs of those products via production orders or process orders. There may be different type of orders related to product cost controlling, and then later you can settle them to the FI module or the COPA module. Again, you don't have to go and settle them to the FI module, even though the option is given here. Most of the time it's settled to the COPA module, because in COPA module you should be looking at it next, the profitability analysis module. It analyzes the revenue, costs and profitability of the products. The keyword is the profitability in different dimensions. So you take the cost from these product for type A, the product A, product B, product C, and you allocate to the profitability analysis side, because for each of those products we need to see at what customer location, at what type of product group, in what type of area, how much profit we made. Now for example, you might have product A, product B. You have 2 products. So you can find the cost of these 2 products via the product cost controlling module. Now we have manufactured those 2 items and we have sold it to different customers across the country, across the globe, to different locations. Now we need to find out how well is product A doing, for example, in Australia, in the state of New South Wales and in the city of Sydney. So because we need to see if it's not doing too well, we should either scrap that product away from selling that area, or most importantly, we should do better marketing to promote that product in that particular area. So this will be captured in the customer master data, because when you actually create the customer master data, you mention what their address is, what their state is, what their country is, what their city or suburb is. So all those details are captured in the customer master data. And when you actually sell the item, you know exactly to which location, to which state, to which city, to which country it's going to. So all this information which is captured in the customer master data, it also flows onto the COPA module when you actually do the billing of those items which you're going to sell to the customers. So you have the costs or the how much expenses cost incurring for you to produce the product A, you analyze via the product cost controlling module. And all the different revenue dimensions related to the customer master data will come through the COPA module. So finally you have the cost, you have the revenue, then you can see the profitability, and you can see different dimensions. That's how all these three modules link with each other. You initially take all the overhead costs into your cost centers or internal orders. Later you can allocate them to a product cost controlling module or the COPA module. You take all the expenses and the costs associated with producing that particular product in the COPC module. You can further allocate them to COPA module or leave it there as it is. And in the COPA module, with all the allocations coming in and all different values flowing in through different dimensions, you can see your profitability of your products. So that's how the costs actually flow within the CO module, where these three